Hello, and welcome back to Coin Lady channel. BlackRock and Wall Street are preparing to enter the cryptocurrency sector, and this is major news. According to Forbes, a BlackRock insider has predicted that the price of Bitcoin, Ethereum, and XRP will all crash soon because of an impending $17.7 trillion earthquake on Wall Street. Let me explain in more depth what I mean. A former managing director at BlackRock has projected that the U.S. Securities and Exchange Commission will approve a Bitcoin spot ETF within the next few months, allowing firms that oversee $17.7 trillion in assets to invest in Bitcoin. One BlackRock executive was quoted saying that all spot Bitcoin ETF applications are likely to be approved by the SEC at the same time. There's no way they'd want to hand the initiative to a rival. According to Decrypt Scorefield's reporting from a London conference this week, former BlackRock managing director Stephen Skolin predicted that it would take the SEC between 3 and 6 months to approve a Bitcoin spot ETF. Over $1.5 trillion in the last month. Franklin Templeton, the world's largest asset manager, has applied to the SEC for a Bitcoin spot ETF, following in the footsteps of BlackRock, the world's largest asset manager, who initiated the rush of applications in June. Other major asset managers, such as Fidelity, Invesco, Galaxy, WisdomTree, and many others, have also applied. They've asked for feedback, which is a small but important step in improving the dialogue score and general tone of the production. Therefore, he is totally correct. I mean, we've been keeping up with this, so we already know this, right? New record highs can be expected in the next bull market as a result of the influx of capital into the market. And like we've seen historically, it'll go to Bitcoin first before trickling down to altcoins. As has been indicated, this chain continues with Ethereum and ends with XRP, indicating that we have entered a new paradigm thanks to the involvement of Wall Street investors. Looks like they've laid out their strategy for us to see. Right? Let me quickly review what has happened so far this year. Bitcoin hasn't been officially registered for by the likes of BlackRock, Fidelity, Franklin Templeton, etc., but it is worth noting that BlackRock has a sizable stake in Bitcoin mining operations. They are major investors in several publicly traded Bitcoin mining firms. They are also keeping some of Circle's USDC reserves. Earlier this year, Charles Schwab, Integrity, and Citadel unveiled edX Markets, a cryptocurrency exchange. An institutional cryptocurrency market. Naturally, PayPal has introduced a stable coin based on the Ethereum technology. Deutsche Bank will begin providing institutional customers with cryptocurrency custody services. There is development of deposit tokens on private blockchains at both Citibank and JP Morgan. MasterCard has begun a CBDC initiative that includes Ripple Consensus and Fireblocks as participants. Naturally, Visa is increasing its reliance on the USDC stablecoin based on the Solana and its theory. People and institutions are actively working on and releasing products, as well as filing patents and applications, which all but guarantees widespread acceptance in the near future. Since I don't believe there has ever been this level of capital waiting to come in with these ETFs right, the next bull market is going to be amazing. There will be a ton of capital flowing in, and I'm expecting it to be one of the biggest bull markets we've ever seen, if not the biggest. The introduction of an exchange-traded fund, ETF, would be a game-changer if you consider retirement savings and other pools of cash that cannot directly access cryptocurrency but might through an ETF. As I've already mentioned, Bitcoin will see the same kind of pump that has propelled it to new record highs in the past, and this will cause liquidity to flood into altcoins, causing their prices to similarly soar. I'm ready for the next bull market since I have Bitcoin, XRP, Ethereum, and other cryptocurrencies in my portfolio. Also very positive is the fact that large sums of money are being invested by institutional investors. Hong Kong Crypto VC, backed by billionaires, invests $100 million in blockchain fund. Other than digital assets, the Titan Fund will prioritize equity investments in early-stage firms in the gaming metaverse and NFTs. See also MCC Global, a Hong Kong-backed venture capital firm with an emphasis on blockchain technology. Richard Lee, a billionaire, has set up a fund called Titan to help startup businesses in his field. Particular attention is paid to blockchain-based early-stage firms, fintech infrastructure verticals, and consumer applications including gaming, the metaverse, and non-fungible tokens. Anchor investor CMCC Worldwide pledged $50 million, while the fund's initiator added a 15% general partner commitment, all of which will be used to make equity investments in blockchain firms. Great entrepreneurs will be able to create a new generation of Web 3.0 and blockchain-powered fintech applications with the help of the Titan Fund, an investment vehicle backed by the likes of Richard Lee's Pacific Century Group, Hong Kong's Jepson Capital, Winklevoss Capital, and Animoca Brands co-founder Yet Su. Cameron Winklevoss, co-founder of Gemini, released a statement in which he said, "Folks, this is significant. And they're putting money into both kinds of tokens." Now, though, not everyone is putting money into tokens. Some are, while others are investing in the shares of companies that are laying the groundwork for the widespread use of tokens across several blockchains. That they are doing so while markets are falling and the macroeconomic outlook is gloomy is certainly encouraging. They anticipate that the current state of affairs will soon reverse, that the market will once again be bullish, and that people will forget about the current difficulties and worries. How we feel things is a strange thing. This, however, is why you need a macro perspective, knowledge of market cycles, and an understanding of technical analysis. We are not yet at the bear market's bottom, but we are in the middle of the transition to the bull market's upper levels. We are missing out on this year's apparent Bitcoin upswing. However, we are not yet at the stage of a bull market where widespread optimism is developing. Those of you who have been through something similar will understand what I'm talking about. My prediction is that the great bull market will begin around the time of the Bitcoin halving. That's what I'm hoping to see when I take a look at it. Thus, I have decided to employ dollar cost averaging. I've been keeping tabs on the activities of these large investors, such as the sums of money they've amassed and so on. Just remember what I mentioned about using a dollar cost averaging approach, and have some patience, folks. Now a short word from our sponsor, Uphold, the crypto investing platform and exchange I've been using since 2018. They support over 250 different cryptocurrencies, have over 10 million users, and are available in over 150 different countries. I've spoken with the company's CEO and a number of other users of the platform, so I can confidently recommend it. You can also trade 37 different fiat currencies and precious metals on their platform. This is a truly novel platform. The description has a link to further information about Uphold if you're interested. The $2.5 million raised by the Flare block is great news toward the goal of making blockchain transactions completely anonymous. In order to implement conditional encryption into blockchains, the Flare block team has raised $2.5 million from investors. Yes, folks, just more evidence. Remember, once more, the current crypto market economic forecast. The current pricing isn't doing anything particularly noteworthy. People are donating money to these businesses, so they are able to expand. That's because they want to ensure a profit from their capital. They anticipate that the current market cycle will soon end, and that once it does, we will return to bull market conditions. In addition, the S-curve adoption model predicts that adoption will continue to grow in the future. Right. As a result, Flare block aspires to actualize conditional decryption prior to execution privacy. By allowing users to specify conditions, conditional decryption paves the way for protocols to carry out transactions without disclosing any on-chain data beforehand. In contrast to technology based on ignorance, information is only encrypted or decrypted under specific conditions in Flare block. This is achieved by the use of cutting-edge cryptography techniques, including witness encryption and identity-based encryption. Fully homomorphic from seeing it right encryption, or FHE, is another area of research for the firm since it will allow for computations to be done on data that has been encrypted at both the storage and transmission levels. According to Momini, Flare block's co-founder and full block worker, $2.5 million in pre-seed money was secured to create this system. This is the phase of construction that will pave the way for widespread use by the next billion people and many more applications. And as you can understand, that will have an unbelievable effect on token prices over time. Therefore, we must wait patiently as these infrastructures are developed. Look at the dot-com era of the 90s, like you always do. Boom. It went through cycles of prosperity and collapse. But as the frontrunners began expanding their technologies and seeing wider usage, their valuations naturally soared and increased. So that's the way it is, guys. Now, Stuart Eldorado, Chief Legal Officer of Ripple, has weighed in on the SEC's brief in the Coinbase case, which we highlighted in yesterday's news, saying, "There's so much wrong with the SEC's brief in the Coinbase case that I don't know where to begin." Let's begin with the SEC's unsubstantiated argument that, unlike baseball cards, digital assets do not have any inherent or intrinsic worth. So, yes, the Securities and Exchange Commission. We witnessed Congressman Richie Torres publicly call out Gary Gensler over the Pokemon card incident, and they continue to seem like fools. Gary was probably taken aback by the suggestion of tokenized Pokemon cards, thinking instead that the conversation was about some sort of Pokemon card security measure. The SEC may be making up rules as they go along, but we're veterans of the sport. We've been held back, and now Blackrock and all these other people have to wait for regulations and an ETF, exactly when the disruptive crypto firms have cornered the market and are raking in the dough. Let the people from Wall Street come in and take over, because that's the name of the game. This is essentially the incumbents putting up barriers in an effort to slow down the disruptors so they can catch up. Now, the SEC is suing Elon Musk, which is an interesting development in and of itself. Therefore, in 2022, there will be an investigation on the acquisition of Twitter. We'll have to see if this gains traction, but it has the potential to slow the SEC down. Since Elon is plainly trying to do things with cryptocurrency, Twitter, payments, and much more, I have no doubt that he will respond with a counterattack. However, further information is required. Now, last but not least, former Ripple employee and current, if I'm not mistaken, Filecoin employee Matt Hamilton connected with Kyle Samani. If you're unfamiliar with him, he's the managing partner and co-founder of Multicoin Cap. I've written about how these individuals propagate a lot of XRP-related misinformation throughout the years. I believe they were shorting as well back then. Also, I believe they understood Bill Hinman's and the Ethereum group's work. This tremor would be sued. Therefore, they were shorting, inserting shorts, and spreading FUD. The XRP is not a security t-shirt from the Ripple Proper Party was what Matt wore. You might be wondering why it matters that he handed it to us, Kyle. Years ago, Kyle was wearing a t-shirt that read #XRP. That's security in reference to the Ripple cryptocurrency. Again, he was shorting XRP, I think, and they knew they had insider information. Will they face consequences? How about we wait and see? No, I doubt it. Matt, though, claims to have had a pleasant chat with Kyle. And time will tell. What happens next will be interesting to see. Something seems to be up with these folks, you know. They are the other partner that has been blocking me. He looks like an Indian to me. His name slipped my mind. However, he is also one who was seemingly just making the rounds, as though he were promoting something. Please spread the word about the safety of XRP. What's the point of caring about that, though, right? Except if it benefited you monetarily, of course. Also, I'm planning to short a rival cryptocurrency to Ethereum. In all likelihood, I will outlive Ethereum as well. That's right, they were actively engaged in these activities. The news, however, is as follows. Give me your feedback. Share your ideas and feedback in the space provided. If you like this video, please hit that like button and subscribe my channel. See you later, bye.